So there's been a lot of stuff in crypto and banking that have fascinated me recently. So as I covered last summer, there is Erebor Bank, which has fascinated me from the start because there's pretty much never been a crypto native bank from the start, where essentially the bank starts from crypto. And Erebor was founded by the defense tech billionaire Palmer Luckey and named obviously after Erebor from the mountain in The Hobbit. And it raised 635 million. I believe it may be a little bit more than that before the bank even opened. So it got a bank charter in 4 months, and that is pretty much Erebor. So Erebor is live, and startups now, which is what it's focused on, can now get an bank with Erebor. Kraken, about a bit ago now, I meant to release this video earlier. Kraken plugged into the Federal Reserve payment system, which is the same payment system that JPMorgan uses, which is trillions of dollars per day run through that system, which is a crypto exchange on Fed rails, which is Kraken. So JPMorgan as well, a couple days past, aggressively is now building out their startup funding banking system. So they are also trying to fill the same void that Silicon Valley Bank left open that allowed Erebor to jump in. So there's three players, all somewhat, even though attacking it from different angles, possibly converging on the same topic. So for the Silicon Valley backstory, in March of 2023, there were three banks that collapsed in 1 week, which were Silvergate, Signature, and Silicon Valley Bank. So Silicon Valley Bank was the startup bank that served nearly half of all US venture-backed companies. And when it went down, essentially it took the entire crypto tech banking infrastructure with it, which was greatly troubling if you were a startup founder at that time. So Silvergate Exchange Network was gone, the Signature Signet platform was gone, and there were essentially 24/7 settlement network crypto companies that no longer had a bank to bank on. So the crypto industry in America was essentially debanked overnight, and that left a massive hole. The day that Silicon Valley Bank collapsed, essentially the first move was JP Morgan, and Jamie Dimon literally pulled one of his executives aside and considered buying out Silicon Valley Bank, but they essentially passed on Silicon Valley Bank because at the time there were a ton of Silicon Valley Bank customers that were deciding to put their money into Chase anyway. But the same representative felt that there was a full competitor availability to SVB, Brex, Ramp, and Mercury at the time. So he ended up hiring at Chase key people, including John China, who spent 27 years at Silicon Valley Bank and now is also working at Chase. There are currently around 12,000 startup clients and 550 dedicated bankers on both coasts, which is the tech budget of this year of 20 billion. So they hope to be the one-stop shop for founders from seed round and IPO and beyond. But VCs have complained for the longest that JP Morgan essentially takes too long to open accounts, and there's no representation or indication that that's going to change anytime soon. So revolving payment issues meant time-consuming branch visits. JP Morgan is still a old bank, which is, JP Morgan, so they're heavily bureaucratic. Erebor, on the other hand, is incredibly credible, but also far faster to move forward with opening accounts. Erebor is a real national bank, which is an OCC charter, FDIC insured, and can take deposits, make loans, everything a normal bank does. But it's built from the ground up with blockchain stablecoin infrastructure. So it's not a traditional bank with crypto that's bolted on in a really sketchy kind of way. And it's also not a crypto company trying to be a bank. The Planet Lines are backed by crypto or private securities, and they also are doing something which is kind of rare, and I would be curious if they are still doing this. But they are actually doing loans for AI chips and GPU clusters. So underwriting for defense contractors with non-traditional collateral, and Palmer Luckey himself claims it's like a farmer's bank for tech. JP Morgan, on one hand, is an old bank that's retrofitting their bank, which is a giant institution, to serve startups, whereas Erebor, I believe, is going to win this because it's built for startups from the day one. So there's no legacy visits, no branch visits, and no 15-minute account taking forever opening complaints. So the founder and all the people involved are fully equipped to survive this and thrive. The interesting thing that comes out of left field, though, is Kraken, which is the exchange that became a bank, and it's been around since 2011, one of the oldest crypto exchanges. So, March 4th, 2026, the Federal Reserve Bank of Kansas City approved their master account application, which they took 6 years to essentially attempt to get. So, they are the first digital bank in U.S. history with direct Fed payment access, which is different, and also direct access, which is the same as FedWire. Why this is pretty revolutionary, and I'm also surprised other US-based crypto exchanges haven't had this done yet for them, is that every dollar in and out of Kraken went through a middleman bank. So this added a ton of costs, a ton of time, and a lot of risk. So now they are able to settle directly on the same rails as JPMorgan, Bank of America, and Goldman, which is essentially a crypto exchange on the same payment system as the largest bank in America. The one interesting thing about that, though, is that it's only approved for 1 year, and in that 1 year agreement, it can be pulled later. But the Fed is expected to finalize its border guidance on these skinny master accounts by the end of 2026. To get to this point, Kraken has acquired NinjaTrader for $1.5 billion, which is the largest crypto TradFi deal ever, and it also bought the CFTC regulated exchanges, which is the small exchange. What Kraken is really going towards and building towards is yield vaults, salary deposits, cross-border payments, all in 300 plus currencies. And in quarter 3 2025 has also made $648 million, which is a record for them. And they also have 5.2 million funded accounts, and they are filed for an S1 IPO. This all really was able to happen, which I think was a great choice, was the January 2025 executive order, which was Donald Trump's claims for the U.S. to be the crypto capital of the world. So in March 2025, OCC drops the pre-approval requirement for banks doing cryptocurrency. And in April 2025, the Fed withdraws its own crypto restrictions, which was a great choice. In that, the FDIC tells state banks to engage with crypto without asking first, which was a big deal. And then the SEC also decided to kill SAB 121, which was the rules that blocked banks from custodying crypto. So, in July 2025, the Genius Act passes, which was the first real federal crypto law, which got voted in a bipartisan vote, which was 68 to 30 in the Senate. And essentially, the stablecoin reserve were established in that bill with one-to-one reserves, monthly disclosures, and bank receipt protection. The stablecoin numbers overall, 2024 transaction volume is $27.6 trillion, which is more than Visa and MasterCard combined. And there's also a market cap of $308 billion, which JPMorgan projects about to be $500 to $600 billion by 2028. So Citi's projection on that is a little bit different, where JPMorgan predicts essentially 500 to 600 billion. Citi is a little bit more bullish, I would say, with a 1.6 trillion to 3.7 trillion dollar estimate by 2030. The other interesting thing is that not only is JP Morgan attempting to finance startups, but they're also experimenting with tokenized deposits on public blockchains, which is essentially, at this point, once again, an institution, a major bank consortium, exploring a joint stablecoin. And Morgan and Goldman Morgan Stanley are also selling $530 million in structured notes tied to the BlackRock Bitcoin ETF, which isn't, a fringe choice. The interesting thing on why I'm covering this, though, is that it's very interesting to me on how this is happening in the larger crypto ecosystem. Because for the longest time, as we've seen, in 2025 was a massive year for crypto adoption and crypto's legitimacy. So we've seen crypto go from a niche thing and an unregulated thing to a very legitimized industry, which is far from the crypto perception that it's had over the past few years. What this means for the future, though, is the question I have, is that what will happen for the other institutions that feel like having their own bank. Now, another company that is not covered in the core of my writing here, but another company is Bridge, which is owned by Stripe, which is an API that you guys have definitely interacted with to pay for things online. If you ever made an Amazon purchase, you've used Stripe. The interesting thing with Bridge, though, is that they've also applied to become a bank. I think they may have gotten their bank charter. I'll leave that up here. But it's an interesting thing to me that we've seen different companies essentially become a bank as well. But Bridge is interesting to me because Bridge is also, a bridge for stablecoins. So it might be pretty revolutionary for Bridge to also have the ability to cover different amounts of stablecoins from cross border while being based in the US, while being a bank as well. The expansion of what these type of banks offer is something that I'm curious to see. We haven't seen it yet as of March 16th, 2026, but we'll see what they actually reveal. I would also be very curious if we see a completely different style of bank. So we've seen a bunch of neobanks out there like Revolut in the UK. And we've kind of seen that, Kraken here can kind of become in the US a Revolut-ish kind of institution. But the other interesting two people in this, which kind of going on a ramble here, but is Coinbase and Robinhood. So Robinhood and Coinbase are both kind of competing largely for the super app finance thing in the US. So Coinbase on one hand has released prediction markets. They've also released perps, which is perpetuals. And both of those markets are doing pretty well for Coinbase. And for Robinhood, on the other hand, they're also trying to tokenize, which I do believe they have their tokenized ventures fund. They've released their tokenized ventures fund, which essentially is trying to allow people to buy private stocks in companies, which is going to be a very interesting thing if Robinhood is able to own that moat, because pre-existing ways of buying stocks in private companies is not very easy to be able to be done from mobile, and a lot of usage for Robinhood is on mobile. So we've kind of seen the interesting thing. I don't know, have no evidence for whether or not the recent oil rise and fall was due to, a lot of retail capital being able to buy oil. That's probably not what caused that. But it's interesting when the private shares of companies are being essentially opened up to retail and being opened up to the average consumer, which can trade, various different stocks at various different prices. I'm curious what this does for IPOs in the future and also what valuations happen in the future. So multiple things are interesting here. The biggest thing is that hopefully this summer the Clarity Act is passed as well, which would be a landmark bill as well for crypto. Thank you.